Hi, I'm Julie Wilkinson, and I'm the owner and founder of Wilkinson Accounting Solutions. We are an accounting and consultancy firm that specialises in mergers and acquisitions. We help business owners exit plan. We act as acquisition CFOs for buyers, and we also have a back office finance team, which work with our strategic team to help business owners really understand their accounts, making sure that their integrity stacks up and they have good controls to allow people to transition their business from a lifestyle to an asset. I want to talk briefly today about our acquisition. So we purchased our own business in March 23. We bought 100 clients off a retiring accounting firm. So the process we went through is we did get it through a broker. There is a lot of bad talks about brokers, that they overvalue businesses. I'm happy to look at off-market deals and broker deals. At the end of the day, even if you get a deal from a broker and it's overvalued, then you can just ignore it. I don't see why you would rule it out, personally. And we work quite closely with a handful of brokers, some ethical brokers that, you put their customers onto us, that use us to help get valuation from things in process in the right, make sure the valuation is correct. So not all brokers are bad. And it probably took about 6 months all in all, partly because I was on holiday, and then they had tax season and things around the January, because we closed it in the March, so we delayed it. But it all ran smoothly. So we got all the information, pulled our own cash flows, went to market to get cash flow funding, which was all accepted. I mean, we do cash flow reports and pitch decks and things for funding all the time for customers. So it's our bread and butter. So for us, that wasn't a hard task. But what was interesting was, we had really open, upfront conversations with the sellers from the start, going back and forth, like challenging. But ultimately, it meant that when we came to heads of terms, we actually signed our heads of terms in one day. There was none of this going back and forth, I like that, I'm not sure on this anymore, pushing back. I mean, ultimately, it's just a bit of a time waster, right? It can take a lot of energy to buy a business. You can get quite excited, think it's the one, and, feel like you're getting somewhere. And then when it gets to that time to sign, and either yourself or the seller starts pulling out because, you're getting the fear or something's not clear, it probably means that you haven't had the right conversations from the start. We see this a lot in acquisitions where buyer and seller aren't aligned. There's lots of professional partners involved, and sometimes I think the wrong partners are having conversations with the wrong people, trying to translate information back and forth, or legals are taking over and trying to have discussions with the accountants. I mean, our view is you just talk buyer to seller directly, because ultimately both parties need to have the same understanding of where the accounts are, and that's how we approached our deal. So we ended up closing. It was quite a old school accounting firm. It's one of our strategies to buy retiring accounting firms, because our overall aim is we want to improve the standards within accounting. Not to say that necessarily that the accounting was done wrong before, but it's more about what do people see as value these days in accounts. I mean, I think gone are the days of men in suits processing receipts and processing tax returns. I mean, ultimately, yes, that still needs to happen, and it is still a valid role. As much as these systems say they can process their own tax returns, you can't, because unless you know the tax rule book, I don't know how you know whether what you're processing is right. You might be able to click a button, but it doesn't mean it's right. But that doesn't mean there isn't the need for more understanding. I mean, from coming where we come from seeing a lot of businesses through acquisitions, one of the things we see often is really poor balance sheets. Business owners say they understand their accounts. My view is they get a profit and loss and they see a tax bill, but I think the lack of understanding often comes from the balance sheet. They don't understand financial statements, which is causing a problem. They might think, oh, why do I need? I mean, I host a podcast channel called The Build and Exit, and I had a guest called Fiona who came on and spoke about how she thinks she tripled the value of her business by really understanding the financial information of the business. So it doesn't mean she doesn't use financial advisors, it doesn't replace them, it doesn't mean that you're going to run the business, because ultimately as the owner and the MD, you don't have time to run the finance department. But that doesn't mean your knowledge shouldn't be there on how you understand financial information, because advisors aren't with you 100% 24 hours a day, and sometimes you might need to make a quick decision, and it is sensible to have a good understanding so you know what decisions you're making. Often there's a lot of guesswork. Oh, I can't do this because I haven't got that money in the bank, or I can do this because I've got that money in the bank. But we all know that money in the bank today doesn't mean money in the bank in the future, and people often don't even have basic 12-week cash flows in place. So as part of our transition in our journey is we're systemizing accounts, having more go through the accounts, helping users understand their information, their accounts and what it means, how it impacts them, because business owners are legally responsible, directors are legally responsible for their accounts, not their accountants, unless you're audited, which most small businesses under the threshold aren't. And we've been successful. Within 6 months we've got 50% on QuickBooks and other systems as well, and we have managed to have conversations and also help with other financial planning, with investments, setting up group structures, helping people diversify where they hold their cash. There's so much to think about in finance. Finance isn't just processing transactions, processing VAT returns and tax returns. To me, a finance team is really a strategic partner of a business. They should be helping with their strategy, maybe challenging, so helping you build forecasts and commercial analysis of the business, challenging if something looks odd. And ultimately, business owners have to be open to that. It's not for everyone. We work with a certain type of client, someone that wants to understand their information, wants to know. I don't think burying your head and saying you don't need to know is an option. I think business owners do need to understand their accounts. I think they have a duty of care to the stakeholders to understand and make good decisions, or as best decisions as you can with the information at hand. That doesn't mean you don't make mistakes. It doesn't mean sometimes businesses fold. As long as you're doing the best you can with the information to hand and the market you've got, then you have to obviously diversify and go from there. And this is something that we're seeing. So we're still on a journey to do more acquisitions. Through Wilkinson's, we also obviously help our clients. We've helped other people buy accounting firms. We've done due diligence for them. So, we want the accounting industry as a whole to improve via either ourselves or via partners. But we work with lots of other industries. We've done tech, we've done trades, we've done healthcare. We've done so many different industries, hospitality, we've done retail. We've worked with lots of different companies, and we help on 3 key stages of an acquisitions. We either do pre-head support, so we have valuation reports, either top level indicator reports or detailed cash flows, which help we deal with structures and cash flows. We do financial, operational and tax due diligence. We have a circa 70-page checklist that we do, and if someone takes our full DD, we do things like trademark searches and help people really commercially analyse the business. And then we have post-acquisition consultancy services where we help business buyers, acquirers integrate a financial team. So, I think in the UK it's quite common that a lot of businesses aren't really set up for sale. Deals still go through, but the problem is the buyer's then left with the backlash of what the seller hasn't implemented. And if that buyer wants to do a buy and build, maybe integrate more, then they're going to have to get it set up. So, we are working with founders that want to exit, because ultimately the more they can put in place, the more value it's worth when they sell it, and the better the buyer has it. But at the end of the day, we also live in reality. We know where we are. So after acquisition, we believe the most important thing is the financial infrastructure. So the right reporting in place, so your cash flows, any trading reports that the operations team might need, budgets and forecasts and cash flows. And, depending on who your investors are, you might actually have to send reports out to investors regularly. And you want them professional reports with full information so people can understand them. And also, I think the most important thing, though, is, are your management team and key employees financially literate? Owners can't do this all on their own. Best practices is to bring your management team involved in the process, get them to do bottom-up budgeting, so that they can build realistic forecasts, because ultimately any business that wants to sell for maximum value needs to transition as an asset, not a lifestyle. And if you've bought a business that was a lifestyle and now you don't want it to be a lifestyle, you've got to change your mindset into how you're going to make that happen. And that has to bring the employees into it. So yeah, we've got a lot of experience on our own acquisition journey. So if anyone is buying or selling businesses, then you can find our website, Wilkinson Accounting Solutions, or we are on TikTok. Or you can find us or me on LinkedIn. It's Julie Wilkinson Profit Queen. And I'll see you again soon.